Okay, let's rock and roll. Welcome. If you're new to the channel, this is Stock Market Technical Analysis. We're looking for trade ideas that make us money. So everything on this channel is about trying to make some money. Again, it's just my opinion and I'm not a financial advisor, but we're going to get right into the charts. I'm going to show you guys what I'm seeing. A couple trade ideas I think that are triggering just today, so you're going to want to stay tuned for that. Drop me a thumbs up, guys, if you find some value in that content. You know, I usually have couple thousand viewers and only a couple hundred thumbs up. It doesn't take much, half a second to click a button. So I'm giving you guys my time. You guys drop a thumbs up. I do appreciate that. All right, so triple Qs, more selling today. We've got this key level right here. It's about 351.75. When I look at the hourly here, this is your tech sector. So that's kind of your minor support. You can see it was resistance here, then it was support. And yesterday, we basically gapped down and held that level all day. Very choppy price action yesterday. But if you followed my video in the morning, and I tried to get that video out in the morning, I talked about how I was going to trade the market. And what I did is as we gapped down to that level of support, I actually covered my triple Qs, went long, and said I was going to look to ride this thing long for a bounce back into that 357. 356.75. I usually front run a key level a little bit, and that's exactly what I did. After the Fed minutes came out, we had several spikes up into that 370, 357 area, and I was able to close out my long and re-short, and then it bounced a little bit more throughout the day, but I just stayed short after I got that initial bounce into that key level, and I remained short today. So we're looking for breakdowns from here. You can see we've had a reaction now at this level, and we're looking for an impulsive breakdown. Whether we get it today, I don't know, but maybe they want to have some more whipsaw moves where they want to run up and hit that level again. But over the long term, still looking for more downside. Again, it's pretty clear now on the daily chart on triple Qs, the bounce above the 200 has so far been sold into. Now, whether this is a dip buying opportunity on a leg to the new highs, it's possible. But as of right now, I'm treating it, and I continue to treat this as a bear market rally. So the most recent rally we saw in the last month or so, I'm treating as a bear market rally, and I'm looking for the next leg lower. So far, that's playing out as expected. So we're just looking for continuation of that move. On the hourly chart, you can see we're starting to break that level. Not super impulsive yet, but the momentum is pointed downward. So you'll see we're making new lower lows in momentum on the PPO and the RSI, and price is going lower. So as far as I can tell, we are starting that next leg lower. The SPY, second day as of right now, below the 200-day moving average. So you'll see just recently we popped above the 200, but yesterday gapped below it. Closed below it. Today we're seeing more selling. So I don't see any indication as of right now that the selling is done. And ultimately, I see this as a bear market rally, and we're heading down into what seems to be a bear market. So looking for much lower prices on this one as well. Small caps, IWM. So small caps here. We had a level of potential downtrend line here. On the most recent downtrend, we broke to the upside in this rally, but today back below it and selling pretty impulsively so far. So we'll see if the selling continues, but as of right now, it looks like more downside. Looks like we ran our course on the bear market rally. IWM, the big resistance level was 209. Again, that's your big, this was a year-long trading range where we held that support level at about 209. And then once we're below it, it's resistance. So you can see we popped into it, was rejected. Again, popped into it, had a slight move above it, one day above it. That's a stop raid. That's exactly what that looks like. So that sucked in some longs, maybe some shorts got stopped out, and then they reverse it, and boom, big impulsive selling. So from what I can tell, that's a rejection, and we should be heading lower. Most likely, I'm putting an even higher probability now that we're heading down to this 170 area on IWM as our next leg lower. It should be pretty impulsive. I think we'll get it in the next few weeks. We'll probably head straight down there. There'll be little zigs. We'll probably get a little zig at the lows here, right there at about oh, 188. They'll probably step in a little bit and get a little bounce, but ultimately that should fail and we should head lower. So even looking even better to the downside on this one. And, it makes sense. I had a lot of people talking to me when we were bouncing and rallying and popping above saying, why am I trying to short? The market looks only bullish. But see, the thing is that that's only if you're following price. If you just look at price, then you're always going to be on the wrong side of the move because you're never going to be able to catch the turn. So you're going to be bullish when price moves up and you're going to be bearish when price moves down. I often take the opposite approach, and as price moves into key resistance levels and we start seeing momentum fading, that's when I want to start shorting up into major resistance. So just things to watch, guys. If you're interested in learning this skill set, and it is a skill set, it does take take some training, it takes some experience, but starting off, get the basics down. Take my technical analysis course. It's a $99 course, and it should easily pay for itself in the skills that you're going to learn. And then that will help you as I go along in these daily videos. You'll have a base in terms of what I'm pointing out. Concepts will come easier for you. You'll get more experience, and ultimately your trading should get better and more profitable at the end of the day. Okay, oil. So this one looks like it's starting to break down and we're getting some sell signals. This is oil futures CL. Again, we've got an uptrend line right there, walking up this uptrend line. The only thing that we don't really have is negative divergence. We never really had that. So I think whatever kind of pullback we get is probably going to be relatively minor, but it's probably a tradable pullback. Now, what I'm looking for is, I've been kind of stalking this one, DVN, just because the setup is really nice. So look at this setup here. This is from my perspective, this is really kind of the perfect trade setup. You've got big negative divergence on the PPO and the RSI. So both momentum indicators have been losing momentum for a while, really since, pretty much since this entire move right here. We've been losing momentum each leg higher. We have a bearish rising wedge, so that's a bearish pattern that typically will resolve to the downside. And the only thing that we're really waiting for is a sell signal or an impulsive break of the trend line. And really what I've got, if you go to the hourly chart, you can probably tighten up your trend line. I've got, starting back in October 28th, a tag of support. Then I got another one. This was a brief little dip below, kind of a bear trap. There's another tag of it. Another bear trap. So definitely whippy for sure, because oil's been very, headline driven. So it's been driven by news and headlines. So as you get breakdowns, and some headline floats out, and so maybe from my perspective, maybe don't take as large of a position on it, just be given the headline risk. But going back to the daily, you can see on DVN we're just starting to crack the trend line. Now, it's not that impulsive yet. I need to see a little more impulsive selling to confirm this. Ideally, a big red candle would give you a solid sell signal. But we could get that today. So I just want to point that out. I'm likely going to start taking a starting short position if I get just a little bit more selling. All right, so that's kind of where we're at. And then as long as we can close and they don't manage to give us a recovery by the end of the day back within this range, then we'll have a sell signal on DVN. First level of support I see at 50.60. We've got another level of support here at 45.51, and then a very final target could be here at 35.78, 35.80, somewhere right in there. So those are kind of key levels of support where you would expect a bounce or potentially the bottom, So as we sell down, probably cover a short trade there, let it bounce, and then wait for a break of that, and you can continue to trade that down. Gold continues to drift sideways, just really going nowhere. So gold bullion, we don't have any signs of what's going on. GDX continues to hold support. So here's the miners, here's the uptrend line on GDX on the daily chart, and we continue to hold that support level. So I don't see any sell signals in the miners. I'm looking to buy the dips on miners, but I don't see any real reason to exit. Here's PAS, you can see holding support there. So in general, the miners still look relatively constructive, although the metal is just kind of consolidating sideways. So whether we get the pullback, If the metal dips, then we're probably going to get some sort of correction in the miners, at least a minor correction, but I don't know if we're going to get it. So it's I'm kind of undecided on the short-term price action of where gold and the gold miners going. I don't see any sell signals in the miners, but at the same time, I see gold just drifting sideways, and it has the potential to do a full back test down to 1834 would be the key level of support. Again, that was your big isometrical triangle, all right there. And then big bull market support line down here. All right, we broke to the upside, so we had the breakout, but you could get the back test, and then it should be off to the races. So UPS. All right, so yesterday I just drew this line here this morning, this one right here, potential minor support right there, but this is what my chart looked like yesterday. Good support right in here, support there, support, kind of a breakout move there, and we just hit that. So that support at about 194 area, clearly taken out today. Nice selling so far. So looks excuse me. So it looks like that support is taken out. We should head down to the next level of support, which I don't see till about 177.61. All right, decent support right down there. So from where we're at now, it's another 6% or so. All right, so I pointed that trade out a couple days ago, and so far it continues to work and profitable. Moving on. Semiconductors, SOXX, they are falling to support just slightly below, but we've got some support right about 435. And I think it's going to break. I don't know if it'll break today, but I think it is going to break today. So you can see this was kind of a key level of support here. We hit it again, had a nice impulsive rally, but we're back down at it, and we should break. I don't see any support on these till about 387.75 or so. Kind of a zone of support right down here. So I think these are going to go. And this is where everyone's hiding out in right now. You can see that basically everybody's moving into the defensive sectors. This is healthcare XLV. Very, very local to the United States economy. You don't have foreign war threats and things like that. And this is where everyone's hiding out at. So XLV popping up today. I don't see any reason to short this thing. Just kind of let you know. And this is the second largest sector in the S&P 500. So tech is the largest, and this is the second largest. So that's probably one reason why the market's not completely falling out of bed, because the second largest sector is rallying pretty strongly today. So things to look for. I'll just keep an eye on this, but I just want to point that out. And then bonds, you can see bonds, TLT, just continuing to sell off, down another 1% on TLT, which means interest rates are continuing to rise. So rising interest rates will continue to put pressure on interest rate sensitive sectors like tech, real estate, even the banking sector. And I know a lot of people say that rising interest rates is positive for the banks, but usually when you have interest rates becoming more expensive, less people borrow. All right, so the banks can't make as much money because you got a lot less people taking out loans because they can't afford the loan. So that's what we got, TLT. Now, TLT is likely going to get a little bounce here, but we'll see. Any kind of impulsive selling in this area from TLT, you should see that really impulsive selling start to pick up in the tech sector. Okay, so to wrap up, I'm just really keeping a close eye on this DVN for next potential short trade. Again, we need to see a sell signal. Just being below the trend line and breaking the trend line, is not good enough. I need to see impulsive selling. I need to see the selling and the volume pick up and really the intense selling start to show itself. We don't see it yet. So until I start to see that, we don't have an official sell signal, but could show up any minute. So thanks, guys, for following along. Drop me a thumbs up. Check out the course. Link in the description below. And I'll catch you guys on the next video. Bye.